Coming down to the basement is our new friend and author of Iceland's Secret, the untold story of the world's biggest con, Jared Bibler. Welcome to the Stacking Benjamin Show.
Thanks so much, Doc G, for having me down to the basement.
I'm excited to have you here. This is a whale of a story, but I think to get people on board with where we stand, I want to ask, in terms of scale, talk about the disastrous effect of the Great Recession on the U.S. stock market versus what happened in the Icelandic market at the end of 2008.
The U.S. market, of course, everybody remembers that. I think a lot of your listeners lived through it. I think the U.S. market went down around half through that crisis, if I'm not mistaken, something around that. Also the same for the other big markets like Germany. But in Iceland, the market went down by 97%. So effectively, it went down to zero in a very short time.
Yeah. And, you know, this is a big deal for any market. But up to this point, people had thought that in Iceland, you couldn't do wrong. This was like a really strong market. At least everyone thought it was up to this point.
Yeah, there was a lot of foreign interest, maybe not so much in the market, but also in buying and putting money. Like even Japanese housewives could put money in Iceland via these Japanese savings vehicles to earn a higher interest. So yeah, there was a lot of money and a lot of perception that Iceland was clean, a pure land of the north, if you will.
I want to get down to the details of how exactly this happened. But before we do, let's talk about you a little bit. You were born in the U.S. How did you end up in Iceland in the first place?
I was born in the U.S. and for the 5 years before I moved there, I was working on Wall Street. So I built some of the back office software for one of the biggest banks. I was actually in on the ground floor of the mortgage boom, and I remember the early years of that on Wall Street. This was a big project, and I was working weekends and long weeks for like 5 years. I was getting burned out. I stumbled onto an opportunity in Iceland to do something similar, but in a much more chilled out atmosphere. And I thought, I can always get hired back in New York. Why don't I try this? Why don't I go there? And I loved it. So I was initially going to go there for a year and see how I liked it. And I kind of never looked back. But then, as you see in the book, a few years later, lost everything or almost everything when the crash came.
Was Iceland already on your radar, or was it this job opportunity that really made you turn to that country?
I actually, so I flew back. I was visiting a friend in Sweden, and I was flying on Iceland Air, and I flew back through Iceland. I think it was in May 2002, and I just loved it. I was like, oh, this is a cool place. I would like to come back here. I went back as a tourist a few more times. It's very close to Boston. It's about, depending on the winds, you can get there even in 4 hours sometimes if you have a strong tailwind. So you can go there for the weekend from Boston at least. So I did that a bunch of times, and that's how I stumbled into this job opportunity.
Tell us about this job, and then eventually you had a job with one of the major banks right before the crash of 2008.
Yeah, so the first job was a pretty standard IT job. I used to be a programmer and business analyst, and we were rolling out back office and asset management software for these Icelandic banks. These banks were already growing just by leaps and bounds. I think they were virtually doubling their balance sheet size every year for those few years. All the action was there, and everybody with a little bit of ambition in Iceland eventually got sucked into the banks, including me. So I was thinking, why am I writing asset management software when they need asset managers? And they were hiring even like fishermen to be currency traders. So I was like, well, with my background, I can go in there and run money, and they were happy to have me. So in beginning of 2007, I moved over to the oldest bank in Iceland in their asset management department. We were putting together a fund of hedge fund products, private equity funds of funds, and also real estate investment vehicles. And our biggest clients were the pensions in Iceland, so the retirement system, which is quite well funded there. So there's a lot of money to be put into those type of products.
I noticed that you said originally it was quite cool a job, but eventually you left it. Why?
Yeah, the first year or so was just so, it was really cool for me to write screening algorithms and to write screening tools to look at all the hedge funds in the world and select the most promising, and then to call up people. We had a partner in one of the big banks who knew all the hedge. This guy was like an idiot savant of hedge funds. You could ask him any fund and he would tell you so this was really fun to put together dossiers on hedge funds, to find the best ones, to work with our partners, and then to go physically visit them and interview them, to be the person with the money to deploy and to say, the way these guys talk, it was crazy. I was at a private equity conference in 2007, I think, or early 2008. And people talk, yeah, we'll do one, we'll do two, we'll do five. And they mean million, right? It's, yeah, we're looking to do about five. So it was cool to be on that side. And actually, I'm proud of the funds that we chose in the hedge fund product. It was quite a good product. That was really cool. But I started to lose sleep, especially early 2008 and through that year. There was a lot of funny business going on in that asset management department. Some of this is in the book. Things like, if they wanted a big pension fund to come in, they'd say, we'll let you in at last month's price, that type of thing. Because they didn't have an external administrator, which is best practice. You shouldn't be running the administration of the fund and the money, but they were everything was in-house, back office too, everything. And so the sales guys would say, hey, we'll bring you in, you're going to get 5% return in the first month guaranteed because we're bringing you in at last month's price and the fund is up 5%. Well, that's great for that guy, but for all the other investors who were already in the fund, they lose that amount of cash. It's a zero-sum game. And that stuff and the ease with which those type of things were done in that department really was bothering me. And I lost more and more sleep through 2008. And I finally left. I think my last day was Friday, the 3rd of October, which doesn't mean much to you, but that's the Friday before all the Icelandic banks collapsed the following week. So the 3 banks collapsed in 4 days. So I got out just in time.
When you were having these ethical quandaries, did you have any idea that this was more of a systemic problem? I mean, you were at one of the top 3 banks in Iceland, and you had mentioned in the book that when it came to the Icelandic stock market, those 3 banks made up most of the shares out there in the stock market in Iceland.
Yeah, the market cap of the 3 banks they were the exchange. I mean, they were, I think, 75% of the value of the main exchange index by 2008. And plus, there were a couple of other companies that were closely tied to them. So when they went down, I mean, that's why the market went down 97%, because more or less everybody else had been crowded out. I mean, there were other things going on in Iceland. There was some high-tech manufacturing in terms of prosthetics. There was a prosthetics company, and there were some fishing companies and so on. But by 2008, those had all been pushed to the margins because the banks had grown so that they were 11 times bigger than the country's economy. They were each around the size of Enron. I know now everyone's talking about Enron again because it's 20 years since. I mean, Enron was a huge story in the US, and their balance sheet was like something around $65 billion, I think, when they collapsed. The biggest Icelandic bank when it collapsed, I believe, was $82 billion. And the other ones were around, like a little bit smaller than Enron. So the 3 of them together on average is almost 3 Enron collapses.
Wow. And so to get the timeline straight, it's 2008. You leave your job at the bank because ethically you thought some of the things going on were questionable. A week later, all those banks collapse. In fact, the Icelandic economy collapses. We're going to get into the why in a moment, but I just want to give a little more perspective. Describe what it was like to be an average Icelandic citizen at the beginning of 2009 economically. And how did you feel? You had just left your job. How were your finances? What kind of pain were people going through?
Oh, it was winter in Iceland is dark anyway. You have 3 months of almost no light. So the collapse took place in October, and then really November, December, January are just super dark months. And things were very uncertain. I can't overstate. It was hand to mouth really for a few months. I mean, I had a few months of pay coming in from the bank, but also the prices of everything had shot through the roof. Iceland always had high inflation, but this was like the currency lost most of its value also, or half of its value very quickly. So that meant anything imported would cost double what it had cost. So we had uncertainty around, like when you're in that situation, you don't know, let's say the price of food this month is 10% more than last month. That's scary. And you don't know how long that's going to continue. And we didn't have access to a lot of our savings. So we were kind of just piecing together our economic life on a day-to-day basis. We eventually lost our house, and we had an old car, so we didn't lose our car, but a lot of our friends lost their house and their car. And of course, the pensions that people thought they had been invested in those banks and those bank shares. A lot of the pensions were invested in the equity market. So those had taken a huge hit. It was a dark time. You know, the UK had listed Iceland as a terrorist organization, the whole country, in a punitive action, and that had the effect. They did that in order to freeze payments. So also, and everybody, if the UK puts you on a sanctions list, like everybody follows this in the world. So this meant if you're a fishing company exporting fish, frozen fish in Iceland, suddenly someone owes you for that, and the wire doesn't come through. So those months were really dark. At the time we were living through them, it felt like that was how it might be for years. It was a very scary experience.
Yeah, in the book, you describe a pretty grueling 6 months of being unemployed, even going as far as buying horse meat because that was the cheapest thing you could find as a protein source. At some point, you do get a job 6 months later. Tell me about that job you took and what it entailed.
So I had right away written to the FME, that's the financial regulator of Iceland, as the crash was unfolding. And I said, maybe they could use me because I have a lot of experience and I have outside Iceland experience. And I didn't hear anything from them, but months later, they wrote and they said, you could apply for this position. And the position was an investigator of the crisis. And initially, I think they budgeted only one person. They ended up liking me and another guy equally, so they hired us both. I believe they had almost 200 applicants for that, so they had their pick. I think they took me because I could speak Icelandic by then well enough to do the job, and I was an outsider, and I think they liked that, and I had different experience from outside the country. So that was a dream job. That was a dream job. And when I kicked it off, I was just alone in an office. I mean, they just brought me in and they're like, "Here's your desk." It was a nice desk in a little cubicle with a couple of computer monitors and a phone. And they were like, "Here you go. Go investigate the crisis." I didn't know where to begin. And then kind of like a gift came this letter from the stock exchange. This is the cases that I described the most also in the book. My first investigation and the biggest one was based on this tip-off from the exchange. They had found that in the last few days of trading before the collapse, all three banks had a trader at each one, a single man, who had bought virtually all the shares that came across the stock market for those just 3 days. And they wanted to raise this to the regulator. And I said, wow, this is crazy. This is market manipulation. I mean, they never announced this. This is not a share buyback. I didn't know that they did this. And at that time, that was the panic of October. People were looking at those shares for a sense of comfort and seeing that the bank's shares, this was after the Lehman collapse in the US and everywhere in the world, financial markets were in turmoil. And the Icelandic banks, they seemed to be holding. And then, of course, the crash came and they dropped to zero, those shares. So it's like, wow, they really thought they could do this for 3 days and like nobody would see. But I wanted to make sure that it was just 3 days. So I got through to the stock exchange and I asked them, hey, can you send me like a week's trade? I don't remember, it was like a week or 10 days of trading data because I wanted to see how the pattern developed and do a more thorough investigation. And when they sent me the 10 days, it was the same as the 3 days. So this had been going on for longer. And then I went back I think a month. So I went back into September 2008. So that was the last month. And I saw that even before Lehman collapse, each of the banks had a trader buying most of the volume on the market. So then I went back. I thought, okay, now I'm going to get it. Now I'm going to find the beginning. I'll go back 6 months. I'll go back to, I think I went back to April or May 2008. Now I'm going to get it. This is going to be it. I'm going to see how this started. Because I wanted to know, which bank started this first? And did they, how did this thing unfold? So I went back to the earlier in 2008, and it was the same story for all of those months. But I said, okay, well, I'm going to have to go big here. So I'll just get 5 years. And then we actually found that this had been going on since the summer of 2004. So virtually all the years I'd been living there, I moved there in 2004, all the years people talked about the stock market. That was the talk. If you went to someone's house for a barbecue or an Easter dinner or something, people talked about the market because in those years, the market was going up 50, 60% a year during the bubble years. People were feeling rich and prosperous, and oh, how much do you think the banks are going to go up this? I think they can close above this before the end. That was what the country talked about for years. And to realize that the banks had been more or less setting the share price for that time was really, well, first of all, I didn't believe it. But when I figured out that it was true, it was like a gut punch. It was like, you've been living in a lie for 5 years. I've since found out as I did the research to close the book this year that it went back to 1998, as you saw in the book, probably in chapter 14. The trader for Landsbanki, the head of the prop desk and one of the traders, they were charged with this. And when they were in court, these guys had taken over those positions in 2003. And when they were in court, one of their defenses was, well, when we came in, the bank had been doing this since 1998. So this was standard operating procedure,
So from what I can tell, obviously there was lots of graft and corruption going on, but one of the major schemes is what we're talking about right now. The banks were basically buying back all their own stocks, not reporting it, propping up the stock price, and eventually they're funding it into loans to private businesses, et cetera, that actually made their book of loans look better too. Yeah. So it looked like they were doing more business. This had been something that was going on for at least a decade or close to it. Why did the dominoes eventually fall? Like, why didn't this happen in 2004, 2006? Why 2008?
There was a crisis in 2006 where foreign analysts, including the IMF, but before that, some analysts from Danske Bank in Denmark and also Merrill Lynch, and I think there was one other. These credit analysts, as they do, they did reports on the Icelandic banks and the Icelandic financial sector, and they asked the right questions, and they said kind of like, how are these banks? We don't understand the quality of their loan books. There's a lot of cross shareholding, and the main thing was that these banks financed their rapid growth on the wholesale markets. Maybe for your listeners who don't know, you can finance a bank with deposits, which is where someone comes in and deposits money. Now you have more money that you can lend, or you can issue bonds, you can issue debt on the wholesale debt markets, and you can grow the bank that way. These were basic or largely financed on the wholesale markets, which means that you need to keep rolling that debt. When that debt comes due, you need to roll it. And in 2006, these analysts pointed out, hey, Iceland has to roll, I can't remember the numbers. It was in the billions of dollars. These banks need to roll billions of dollars in debt in the next 12 months. And the GDP of Iceland is only like $15 billion. And these banks have to roll half of this in debt. Are they going to be able to do it? And so on. So they asked the right questions. And that precipitated what I would term the real crisis. It's called the mini crisis, 2006. So that the stock market dropped immediately about 20%. And the Icelandic krona, the currency, dropped 20%. And that was the wake-up call. That should have been the time to take stock. But everyone in the country, including the president at the time, were just so gung-ho for these banks to succeed. And the banks were able to, instead of borrowing on the European debt markets, they started to borrow in New York. They started to get US pension funds, Canadian pension funds to invest. Then they went to Japan and they issued samurai bonds, and they went to Mexico and further afield. And they also started opening up savings accounts in Europe on online platforms and taking retail money to keep the party going. And I have a quote from one executive in the biggest bank. He says now that the bank was already insolvent in 2005 and maybe before. And the final nail in the coffin was the collapse of Lehman. Was the U.S. crisis finally made it such that the world markets froze, and then even the little bit of credit that they had left was frozen, and that brought the party to an end finally. But the party should have ended years before.
So you come in, you're working with the IMF as a regulator. You are an outsider, and you already kind of talked a little bit about this culture in Iceland of. It was kind of the go early 2000s, and everything was going up and couldn't fail. As you were investigating, did you find that there was doubt about the guilt of the parties that you were investigating? And how did the culture of Iceland in general play into your investigations?
Just to correct you, I worked for the FME, not the IMF.
I'm sorry. I apologize.
The FME is the FME, yeah. It's like the SEC of Iceland. So I found, I love to investigate things. I thought this was just very cool chance to do good project, because also at this time, the public was just spitting mad. I mean, people were in the streets every day in front of the parliament for that whole first winter. Just, people had lost their houses and their jobs and felt like they had been lied to by these financiers and by the government, and they were really angry. So I had that behind me. I had that support, or that I felt like there was a public mandate to really do a good investigation, to really find out what happened, and if we could, to make a criminal case. The public was demanding blood at that point. So I felt good on that side. And I was surprised when, for example, my boss at FME, as soon as I had investigated the biggest bank, Kaupthing, and their prop traders, she said, well, okay, you can close the books on that one now, Jared. We can go on to the next case. And I was like, yeah, but don't we need to find out who's involved? Because to do this manipulation was expensive. It cost around $1 billion just in 2008 for the biggest bank to buy its own shares, just in Iceland. They were also doing it in Sweden. And the other two banks spent about the same. They all had to kind of keep together. Nobody could let their shares fall faster than someone else, for example. So I knew this had to be a bigger story, and I was really surprised initially. I mean, I remember her saying something like, you have 1 week if you want to find someone higher up in the bank. Otherwise, we need to close this case down and send it on. So I was surprised at that, and that kind of pushback continued. My only salvation was that the cases were so big, it was like they couldn't be ignored. They were so blatant. But even people around me at the regulator, it was pretty secret, this work. It wasn't, I couldn't even talk to people on other teams, but even the people around me who did know, some of them were kind of like, what's the big deal, Jared? I mean, this is just normal, I was like, it's not normal. Wouldn't you have wanted to know that these guys bought their shares every day? Wouldn't that have made a difference in how you thought about the bank? Yeah, so there was quite a pushback inside the regulator.
Ultimately, you found wrongdoing in the banking system. Some political figures, certainly some business and entrepreneurs. Ultimately, was justice served out? Do you feel like they got that the criminal system, the criminal law system, dealt with them the way they should have in Iceland?
That's a really good question, and I don't have a clean answer for you. On the one hand, I'm very proud that we were able to make those cases. Actually, these share manipulation cases, once we figured out what was happening, they were easy to make, those cases. The evidence was fantastic in the emails that people would send to each other and in the trades themselves and so on. Those cases were easy to make. I'm proud and happy that we did that. The penalties suffered by, for example, the CEOs ultimately were very few months in jail, and then they were out on ankle bracelets and so on, but they were able to be back in society, they were able to work, and then so on. The other thing that bothers me more than that, I mean, I don't have much to say about that. I'm not someone who wants to. For me, it was about getting the truth out. I'm not someone who's like, oh, they should rot in jail or something. But it was more like, I want people to know how they were deceived. And the part that still bothers me today is that our investigations were pretty much shut down in the end of 2011, and there was much, much more to go. There were many, many more insider trading cases, and there were many more institutions that we didn't really even crack open. And so I think some of these executives from the big banks who were prosecuted, they feel like they were singled out. And there's something to that, because there were many more people involved, including politicians, including people in the central bank. It was a systemic problem. And there were laws broken, I'm sure, in those other areas, which there were investigations that were just never done. And so disproportionately, the microscope was on a few people, and especially Kaupthing, the biggest bank. And I can see how they feel. But look, hey, they did terrible crimes. So I'm not going to defend them too much. But I can see how they feel put upon, because they existed in an ecosystem of a lot of corruption, supported from the highest levels of the government. And that reckoning has not happened there, and it's not happened anywhere else.
Let's broaden that conversation a little bit. This story obviously wasn't just written for the Icelandic people, right? Many people outside of Iceland are going to read this. What are some of the biggest takeaways, especially to people like me or most of this audience? A lot of us live in the United States or Canada, maybe in Europe. Why is this important to us?
Well, I'll give you some recent quotes from people who've read the book. Someone I know here in Switzerland, that's a big financial asset management capital for the world. Someone here in Switzerland who's senior at one of the biggest Swiss banks said to me that I wasn't really writing about Iceland at all, that I was writing about Switzerland. He said, "This sounds very familiar, Jared, very familiar." I think if you look at the incentives that we give our regulators and our compliance people and then this side of things, they're not conducive to rooting out financial crime. And even to talk about financial crime happening in banks, people were talking about it after 2008, but that's kind of gone away now. To even talk about that is kind of like, ooh, what are you saying, Jared? Like, I mean, we know that there's criminals in every walk of society, but this is a place where if you want to do big crimes, probably the biggest crimes, you can pretty much do them, make the money, and not be punished. Because on the regulatory side, just look at my own example. I was not rewarded for bringing in some of these billion-dollar cases of market abuse. In the end, my team was taken away, and I ended up leaving the country. And that's not just me. That's kind of how it is. If you want to be a good regulator today, you have to be someone who checks boxes, and probably you have to bring in some cases. You have to do some showpieces to show that you're doing something. But if you look at, for example, what the SEC does in the US, if you look at their press releases, a lot of them are small-time things that they bring in. So they have a lot of press releases. They're very busy. There's no tiger team inside the regulator waiting or looking for the biggest stuff to take down because there's no incentive for them. On the other side, if you're a bank CEO or even just an inside trader, there's a great incentives to cut corners and so on because you're going to walk away with money. And there's nothing like that on the other side. So I think, especially someone like you who's read the book, I think it becomes easier to imagine that what happened there is happening in some form in whatever country that you're sitting in.
I was about to say, do you think that could happen? I mean, a lot of us have quite a bit of assets in equities or retirement funds, et cetera. Could you see something like Iceland ever happening in somewhere like the United States?
Yeah, although probably not so simplistically. I mean, this was so easy. Just have imagine one guy in each firm buying up the firm's shares and never telling anybody. I don't think it's that simple, unfortunately. I think in a much bigger, more complex market like the US, this is more like an allegory for what might be happening. But yes, I do think there's a risk of a really big collapse, something that makes 2008 look like the preview. Like I say in the book, after the First World War, they called it the Great War. It's like we call it the global financial crisis. Or I think in the US, you call it the Great Recession, right?
Yep.
But that could be like the first Great Recession, There could be the second. And I kind of feel, unfortunately, like if we don't get our act together, we changed some good things from 2008, but in terms of like bank capital ratios and capital adequacy and stuff, that's better than it was. But we haven't put in these tiger teams who go after financial crime. In fact, the fallout from Enron made it harder in the US to prosecute financial crime. So there was a famous DOJ memo in the mid-2000s, I want to say, 2006, because they went really hard after Enron. And then part of the fallout was that Arthur Andersen was the big five, used to be the big five accounting firms. Arthur Andersen was basically bankrupted by the reputational risk, which I think is a good thing, right? There should be a consequence for firms that go that far. But the DOJ didn't agree. They said we need to be careful when lots of livelihoods are at stake. We need to be careful with prosecutions that would affect people because obviously there were good people at Andersen who had nothing to do with Enron and who lost their jobs. So they said we need to be careful. So that was kind of the death knell. That set up so that when Obama came in, he was like, yeah, let's not go too hard after Wall Street because we don't know what the consequences will be.
The book is Iceland's Secret, the Untold Story of the World's Biggest Con. Jared, the book is already out. Where can we find it?
I mean, it's everywhere good books are sold, like they say. Amazon has it, Barnes & Noble, and so on.
Well, Jared Bibler, thanks for coming down to the basement. Don't forget to grab one of Joe's mom's brownies on the way out. Thanks for stopping by.
Thanks so much.